GM. GM. So here are some CPI days. Today is CPI. If you don't know what that is, Google it. It's Consumer Price Index. It's a measure of inflation. If you don't know what inflation is, learn before you start trading. You should know what inflation is. If you've been alive for the last couple of years, it's been a pretty hot topic. March 12, April 10, March 12, Feb 13, Jan 11, Feb 13, January 11th. CPI was on the same day as the ETF launch. December 12th, November 14th, November 14th. Right. I'll do another few. October 12, September 13, August 10. October 12. September what? September 13, August 10th. Okay, I'll just do those. September 13, August 10th. Done. Got it? Cool. So, what you want to note about CPI is how it almost never produces a big move that doesn't get revisited. What do I mean? CPI day, people tend to get themselves chopped up and lose money because they think that it's going to have this big fucking move and it's going to pump, 5k, or it's going to dump 5k, and it's never going to come back. That's why you have to FOMO. That's why you have to get your bet on. That's why you have to have your trade on right now, because it's never going to... Right? You know this feeling. The news comes out. It starts to pump in one direction or the other. So, back in August, 10th of August, barely moved. Right? Complete non-event. And then spent 1, 2, 3, 4, 5, 6 days just doing shit all before it broke down. September the 12th, when we had it was September 13th, wasn't it? Yeah, September 13th, which is over here. September 13th, not much. Pumped the day before, green day, but it's not as if price never came back, right? There was a wick on the end, so if you're foaming at the top, it closed lower. There was a wick down at the early part of the next day. We then continued higher. Then a few days later, we were traced all the way back, right the way back to that level. And I want you to see something about the inefficiencies that get left behind. We're going to look at this 2023 one, because I remember this one. And if you put it onto a 1 hour chart and you go to 12:30, right, where the release actually came out. 12:30 so basically at the 12 o'clock hour on the Wednesday, here it is, right? So the low of the CPI pump, this is the important level. So on that day, on Wednesday, we moved up into the CPI. We had a wick down. It got bought up. We went higher, came back, couldn't take the lows, and grinded higher. And so anyone who longed the CPI pump and put their stop below here got away with it. Right? They got away with it until they didn't. Until price came back. How long ago? Price came back 12 days later. Right down to that level. To that exact level. Remember, this black line is the stops. Those CPI stops, that area of inefficiency got revisited 12 days later, and that was the stone cold bottom. Right? See it here? That was it. That was the absolute pico bottom. That's important to say because a lot of times people think there's like a time frame on a retest. If it doesn't sweep the stops by tomorrow, it's never going to do it. Or if it doesn't come back and retest in 3 days, it's not going to come back. That was like 12 days later. And it's important. So what's the point of this? Keep those levels in mind. If you get a big directional move, one side or the other, price will come back to it more often than not. I'm going to take a side note here. I'm going to sort of change course a little bit because this happened on the NFP day on Friday. We had the jobs data come out and it was very, very bullish, at least perceived bullish. And the data release was here. And this is the jobs data low, right? So this was NFP a couple of weeks ago. Weak jobs data, the market took it to be bullish, means the Fed are going to cut rates sooner, blah, 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 right? Impulse candle higher, no pullbacks. Guess what level is waiting to get swept? There. And do you think it won't? Well, I'll take the other side of that bet, to be honest, right? Because there's the NFP level. We move up, we consolidate, and then you look at something like the September one. If you go back here, right? September one, we moved up, consolidate. Like, how long did it look as if, oh, we're not coming back to that level? And boom, we came right back to that level. So that's an area worth noting as NFP getting rehit. Now, is it going to hit today? I doubt it. A move down to 59 would be pretty extreme. NFP level hit. And it doesn't have to, by the way. Plenty of examples of it not doing that. I'm just showing it as an example. Following month, October, CPI, red day. We spent 1, 2, 3 days trading within that. So there was no reason to panic, bullish or bearish, fucking FOMOing in or anything on that day. Go forward to November, same thing. CPI came in on a red day. We then retraced it all the way up, all the way back down, consolidated for several more days, spent about almost a month in a range before breaking out. CPI here, a nothing burger. Big red day on the Monday. Tuesday, whipsaw both sides. The next day, took out the lows and the highs. CPI did not matter in terms of just trading the event. Obviously, this one was with the Bitcoin ETF launch, so that's a bit of an anomaly. And you can see this, so on and so on and so on. So what's the point? The point is, you don't generally need to take a big bet or a big opinion on the day of the CPI. Traders tend to put way too much emphasis on it. And they tend to forget the directional move that can come and where price can go and revisit after, right? So I think today's CPI is not going to be the move that people expect. There's a lot more eyeballs on it. There's a lot more focus on it. We had PPI yesterday over here, which is perceived to be bearish because inflation was rising. If CPI follows that and rises, the market will probably freak out a bit. And I just don't think it's that big a deal. Now, let's go and just look at simple support resistance levels. Exactly where we are trapped is 62.6 and 61.8. 61.8, you can see very clearly on the low time frames, is an SR level, pivot level on the low time frames, call it what you will. 62.6 is the exact same. 62.6 was where this structure got lost. It retested it bearish. We couldn't stay above it. And it held here as support resistance. It then flipped and now it's bearish. So between these two levels, you're just ping pong. Above one or the other, it opens up a higher probability of a move down. Now CPI, we are going to be in between these. Whenever this number releases, we're going to be between here. Almost certainly. It's only 3 hours away, right? 4 hours away. And I don't see a move to here or to there in the next 4 hours. I think it's probably going to be like down a bit, up a bit, down a bit, up a bit, whatever. The important thing to watch, in my opinion, is the 61.8 and 62.6. Because I think if we're going to go to the 59s or we're going to go to the 64.5, then I think CPI will probably give a strong move in one direction or the other, which could be down or up. And then I think the level and the price and the area to watch is the retest. If it comes back and retests and holds the 62.6, I think we go to 62.4. If it breaks down, it comes back and retests and holds and fails to 61.8, I think we're going lower. I am very confident, fairly confident, that this path will outperform most paths. If you get one of them, if you get one or the other. Now, what does this mean on the moment of CPI release? Does this mean you trade? No. Exactly the opposite. What I'm saying is you wait for one of these two retests. You wait for the big scary move and everyone panics and sells in one direction and then it comes all the way back. And that retest, if it fails, there's the real weakness. You wait for the big euphoric pump and everyone gets excited and then it comes back, oh no, it doesn't look great. And then if that holds and goes up, bullish. And I'm not saying it has to look price action, no. Retest those levels, yeah. So from a swing trading perspective or a multi-day hold, buying or selling one of these retests for Bitcoin or whatever alt you're in is the play. For the actual release itself, if we're trapped in between these two levels, I don't see much. I really don't see much. You want to trade at extremes, right? The non-farm payroll produced such a nice move because price was at an extreme. It literally could not be more extreme. It had broken down from 60, right? So you're right up against that resistance. It had been down below 59. It had been down to 57. It was consolidating and compressing. And then the number came out, and because you're below resistance, once the number allowed it to break, that resistance suddenly became not resistance and actually produced a massive squeeze as people had to cover their shorts. So you were at this key level. That was super good place for a move to happen. And obviously along that one that day. Now, compare that to PPI, which was a bad number that came out yesterday, and this is what it did. Nothing. Wick down, wick up, messy candle, wrecks both sides. Because Bitcoin is not at an extreme. There is no extreme here. We're not below 60. We're not above 64. We're right in the middle, which is exactly where you don't want to be for news trading or data trading or event trading. So I'll probably trade the actual news release. I think I'm only interested if inflation falls. I was actually on Monday saying I'm only interested if inflation rises. Because my reading of positioning is that on Monday people were positioning for a good inflation number. And we didn't get that with PPI. We got a bad number. We got rising inflation. So now the market, you can see this in the data a little bit as well, is flipping more towards, oh no, we might have high inflation. So I think the market's more prepared for high inflation than low. I think if somehow a lower inflation number comes in, that would be a big surprise. Because PPI and CPI almost always match each other, right? And if PPI is higher, CPI should also be higher, generally. So if CPI somehow comes in lower, and just to be very clear to you, that means a CPI month over month number of less than 0.4, right? Under 0.4, so 0.3 or 0.2, or under 3.4, so 3.3, 3.2. If it's actually under, I will get long as quickly as possible. And I would expect a really, really strong pump initially, and then just take profit as soon as the momentum fades. Right? I would think if we get a lower inflation print, this will pump to probably 63 towards this high. What it does from there, who knows? But the news, the disparity, would be great. If we see higher inflation, I don't know. I don't know how much that will affect. I think the market is pretty short and pretty protective and pretty bearish expecting that because of yesterday's PPI. You saw what PPI did, right? Will CPI produce this nuke? I don't know. I'm leaning more towards if there's a good number, lower inflation, it could be long. But the main trade I think you want to take is one of these two if it presents. So that's it, GN.